Hey folks, welcome to another DAX market update from Charting Star. I'm Joe. It's Wednesday, the 16th of November, and today is the first day I actually feel better. I've been sick for the last 2 weeks, so let's hop straight into it. What you see here is just some statistical work from seasonalcharts.com. It shows you the seasonal pattern of the DAX during the US midterm election years, which occurred last week. And this data is from 1958 until 2010, and that path here, that track actually worked quite well. It suggested a major bottom at the beginning of October before there should be a nice rally into the end of the year. DAX found its bottom at the end of September, and since then we almost rose like 22% until now. So that's for this bit here, and I was showing that SSI, that speculative sentiment index about the DAX, early on Twitter. As you can see what it's saying here, 71% of the retail investors are in short positions. And once you look down here, it gives you the ratio. So minus 2.46 means there are 2.46 more shorts than longs, by the way. And once you look down here, the bottom was somewhere here at DAX. That's when the short and long positions switched over. And since then, basically, the retailers tried to short that rally. And especially since, let's say, mid-October, DAX were around that 12,500 area. It didn't really change at all anymore. They kept shorting that entire rally for almost another 2,000 points until we are up here. And a lot of people ask me, why is DAX not declining? And that's probably one of the reasons why it's staying up there for that long. Because as long as these retailers keep buying shorts and as long as they don't give up, it's really hard for the DAX to come down. That's probably one of the reasons. The other one is the OPEX, the options expiration on Friday. So what you see here is the webpage from stockstreet.de. They give you the open call and put options on DAX. You can even select like individual stocks on here, but let's stay with the DAX. And what you, once you have a look on this diagram here, that large position at 14,100 catches your eye straight away. And there are two things you need to know. The one thing, when did this position get bought? And I'm going to show you that in a minute. And the other thing is, are they going to sell it before OPEX? Because this number here, the 14,100, just means if they don't touch it until Friday 1 o'clock German time, this one is expiring and this position has to be above 14,100 in order to run into money or to take profit out of it. Most of the time, they will sell that position before the expiration. So what we need to check first is the date when this got bought. And I checked that earlier, and we move all the way back to the 8th of September. You see, these are the positions of today, and the highlighted ones are the ones which got bought on that day you select here. And once I flip over one day ahead, the 9th, you see half of that position, half of that large long position got bought on the 9th, but this one here is always one day behind, so it got bought on the 8th of September. So what we can do is we hop into the DAX and check the 8th, which is here, and it had a range between 12,688 all the way to 13,008 on that day, so a range of 300 points. So whoever bought that position bought somewhere between 12,688 and 13,008 on that day. And today we are at 14,200, so this one is in great profit, at least 1,200 points. If they were smart and buying at 12.7, they are already 1,500 points in profit. But now what happened? This position increased by today, and that actually occurred once we check the 11th, so that was Monday, let's check the 14th, and you see that position increased by quite a lot, and then it increased further yesterday. So that means whoever that person is doubled that position yesterday and the day before yesterday. So this person has an interest to run much higher. That would fit that theory with, getting even more squeezed and to get these retailers out of the market. And there's one thing here actually I wanted to show you. Have a look at that squeeze we experienced last Thursday. That I think it was like a 500 point increase like within minutes. And have a look what happened to the retail sentiment. They all got wiped out. So that's like one typical behavior. Abrupt moves to the upside or downside to get rid of these retail positions. So that's about OPEX on Friday. I hope you have a better understanding what's happening there, because most people don't really understand that diagram, and most of the time during these OPEX weeks we have a lot of irrational moves to both sides, and nothing really makes sense. Indicators become useless, and chart pattern is the same thing. You know what I mean. So let's continue with the charts. We hop into a 50-minute time frame. That was my Wilbur Wave wedge and Batman warning from yesterday. You see here in red that wedge, that rising wedge, got its first touch here, second, third, fourth, fifth. So it got activated right here. Fired straight away, but then it came up, and I gave you that Batman warning in the afternoon, and after hours DAX came down very sharply. This RSI divergence stayed negative the entire time. That's why I gave you, by the way, that Batman warning as well. And I had a cycle which was fitting into that area quite well. Today I would say that was a false flag, about a missile hitting Poland. DAX came up straight away again, also the US markets, and then it hit that lower trend line. But today it was more or less on the weaker side again. And just closing around that 14,230 to 40 area for the cash market. And I would like to, yes, I will show you this one here as well. It's a 4-hour time frame based on the cash market. I put this channel in here. It's not confirmed yet because it only got that one touch on the upside, and it needs actually another confirmation here on the upper side as well. And I changed that roadmap here once again because DAX seems to be much stronger than I thought. And I believe we probably just see a pullback into that 14,500 and somewhere into this green box. That's between 13,947 and 14,076. And there might be another push to squeeze these retail bears out of the market. That might be a reason. That might be also a reason why this institution bought these large call options at these levels. So they doubled their positions somewhere here, and we might run into a little cycle low by tomorrow. As you can see down here, that cycle is suggested in that area. If it's only that little drop we saw today, this market maintains to be very bullish. And just to mention that we just finished above 14,146. I was twittering that earlier as well, that we have two completed 9 counts to the downside, which the first one resulted in a little rally to the upside, and the second actually made this whole rally to occur. We rose up to 22% now. And what happened today is we finished a 9 count over here, which didn't really cost like a pullback. We had another 13 count here finished, which caused us a little decline. And today we finished the 9th candle of this 9 count. because we closed above 14,146. A lot of people ask me, what's it about this 9 count? What you do is you take the close of today, and it has to be because it's a bull run. You compare it to 4 candles before, and this one was the one from Thursday. The close was at 14,146. So, and you keep going like that. So once you start here, you compare it with 4 candles before that. So 1, 2, 3, 4. It's above it. This one here, 1, 2, 3, 4, it's above it, and so on. And once you complete the 9, usually there is some kind of reversal, or in some cases it actually points out to a major top or major bottom for a sharper reversal. And once we have 2 in a row of these 9 counts, the likelihood that we see some kind of pullback, the odds are pretty good on that. By the way, the 13 count, you do the same thing, but you compare 2 candles from that current run. So I put here the 13 one finished here, and 10, 11, 12, I think then we just need to check. Yeah, it started over here. So what you do is you check the candle 2 days before, which was here the close, and we are above it. With this one here, we were above it. This one here, we were above it, and then it finished the 13 count over here. We had one more day which went higher, and then we had the pullback. And the funny thing is about that 13 count, we have the same things opposite way around at the VDAX. We had 2 perfect 9 counts in a row and 1 13 count, which finished actually at the low. And as you can see, the VDAX is already reversing. So and once we have a look into that pattern I put here, we have also like a daily RSI divergence on it, and this is a perfect symmetrical triangle. And we had that move A, B, C, D, E, and usually what happens after this probably is a faker to the downside, that we just fire off to the upside in volatility, which usually leads to a larger decline in the indexes. And we're gonna stay with the daily. Just wanted to show you because remember that RSI divergence on the VDAX I showed you. We kept making lower lows, and the RSI reading was such an extreme one. And we have the same at the index, other way around, of course. We had a reading during, I think, during the session from yesterday at 81.5. I haven't seen a reading like that at DAX before. And what usually happens, that we see a major top, we have usually a negative divergence up here, also in the MACD. And you also will see that momentum is flipping over, so that means the last pushes are not that intense anymore, and you see some kind of ending diagonal or some kind of wedge when these moves finish. That's why I think we are not done up there. So this was extreme, and we probably pull back here now a little bit to get that RSI down, and then it moves up, but not as high as this 80.95, probably in this 77, 78 area, and we should make higher highs up here then at the index. And here we got the overall picture. This is also daily chart on the cash market, and I put these rallies up here so you see how much percent we actually went up. This one here, that was the March low. This one was 20%. This rally was 10%. This one was 12.5. By the way, this rally at the S&P and Nasdaq, they were well over 20%. DAX only made 12.5, and he's pretty much doing the same what also the Dow is doing right now. We hit already the 21.6%. So this rally is insane. And by the way, the statistical target of this descending broadening wedge is at 14,750. So we might get up there after we see a little pullback. I don't think that we go straight up there. That will be more or less uncommon. And the other thing I wanted to show you once we move back in time, all the way down to the financial crisis in 2008. I just wanted to show you these rallies, these bear market rallies, and that's one of the reasons I think we are not done up there. Here we have similar things. We went up 17%. This one was a bit smaller, 11%. So this is comparable to the rally we had before until August. And here you see like rallies 25%, 33%, 27%, another 15%. And this one here was actually the bottom in March 2009, and then that rally went actually on for 43%. And yeah, called out the major bottom that this bear market is about to end. And we didn't have that much of these rallies yet. So that's one of the reasons. And I gave you the quarterly chart here. I was showing you that earlier as well. Yes, this quarterly candle, remember that quarter is not over yet. And it went back above that EMA 5. And in 2008, actually, it never really got back above it. But as I said, it's not over yet, so be a bit more patient. There's probably a decline, and I don't think we have seen the final lows yet. Here's one thing. I was, strongly believing that we are hitting that statistical target sometime in December, but I changed my mind, I have to say. That thing now fired to the upside. It's a falling triangle. The statistical target to the upside is 15,634, and the one to the downside is 10,515. Right now, we have to say this one to the downside is a faker, and since I don't really like chart pattern only, I mean, we have to take it into account that this might be an option. I don't believe we run that high, but in case we do, I didn't give you a number, so just to keep that in mind. And that's probably the most important chart for today. Do we got the cycles back here? Yes. It gives you so-called primary cycles, and so primary tops and primary bottoms in this chart. And what we had is we had a rally starting here at the 4th of December, and that was the first cycle which turned bearish at the end of last year. We basically topped out after 1, 2, 3, 4, 5, 6, 7 weeks. Then we came down and we were never able to get over that all-time high. And what happened is that we were making a half cycle bottom in week 9, and then we topped out with a so-called left-hand translation. That means we couldn't get above that top here, and then it's called a left-hand translation. And we came all the way down and bottomed in week 23 with a major low. A new cycle started, topped out in week 4. Same thing actually happened. It was a left-hand translation because we came down, we found a half cycle bottom in week 10, and we topped out, or we didn't get above that primary top from March over here. So we went into a left-hand translation and we bottomed at the beginning of July in week 18. A new cycle started. Same thing, we topped out in week 7, we came down with a half cycle bottom in week 9. We went up, we topped out, or we went into a left-hand translation because we couldn't get above that high. And we made a bottom very, very early. And I have to say that was confusing me by a lot, that we bottomed in week 13. And by the way, when major cycles come all together, I mentioned that many, many times, and it even confused me that once they start to overlap, they run out of sync. And that's why this primary cycle went on the early side. However, because I was actually going for a bottom at the end of October. Should have realized that, but I did not. And we started a new primary cycle then. And we are now in week 8. And we are about to top out as things look like from today. We might run even higher and make in week 9 the top next week or so. But usually, if we top out no later than week 9, then the cycles are usually more or less on the bearish side. So what happens, or what could happen here? And let's say if we pull back even more, like these pullbacks or this pullback over here, and we come back up here, this top will be the key if we run further up, and it will tell us if this entire new cycle is on the bullish or bearish side. Once we get over that top, and we are not 100% sure if this 14,440 is a top yet, we could probably make another top this week or next week, but I think we're very close of making here a half cycle top or a major top before you run down and come back up here. And then the question is if we make a left-hand translation or not at DAX. If we top out then here again with a left-hand translation, means we can't get above that high, then the odds are pretty good that we actually break that low, probably even this year or at the beginning of next year. My guess is that we run into that low in the first quarter of next year again. So that's my buyers for that, for the future of DAX. One thing I wanted to show you about the DAX course index. So this is a DAX without the dividends, and it has a very nice bullish Wolver wave wedge in here. Got the first touch, the second, the third, the fourth, and here the fifth got activated, and it run basically almost all the way up to that target line. And the high yesterday or the day before, we were only like 1.22% away from the high. So you could compare, that's probably the difference we need to run higher even for the performance index, DAX, which we could check right now. So if I measure 1.2%, we end up somewhere at 14,633. So that will be also my target area. We probably finished that entire move. Just to keep that in mind, sometimes it's a good idea to compare the course index and the performance index. As I said, because the DAX we look at is a fake one, because it got these dividends calculated into his performance. Yeah, and one thing I wanted to show you, all these divergences, even on the 1 hour time frame. I was twittering that earlier as well. This is like a triple, or actually you got 4 divergences on the RSI and also on the MACD. We also had the flip over and the momentum here. And you can see DAX just kept making new highs. Even this one here was higher than this one. It's more or less a double top. And once we have a look at this area here, it just finished that move above that gap we made on the 8th of June at 14,446. We missed it out by like 6 points. But that counts pretty much as a double top. So what I said before, either we see a shallow pullback before we run higher, or this one will take a bit more time until the end of the month. And we're gonna have a look at, give me a sec, I'm gonna make a chart for you. Yeah, I was just checking on a blank chart on EW Elliott waves, and the structure seems to be not that clear. Of course, everyone sees like a 1, 2, excuse me, the 3 is up here, the 4 is coming up, and we are waiting for the last push, wave 5. Yes, once you ignore that inner structure of wave 3, that's a valid count and it might be possible. And I just said the keyword, the inner structure of wave 3. I don't like that at all, because if you consider this is we are now in wave 3. This is wave 1, 2, 3, 4, 5. That inner structure of wave 3 in the 3, it doesn't really fit, or it doesn't really look as a wave 3 in wave 3, which is usually the strongest and most impulsive of all waves in that whole pattern. So what I did is I put an extension from that first wave calculated from the bottom of wave 2, and it ends up that we hit that 161.8, which likes to be the end of wave 3, very precisely, and then it pulled back and then it came up again. So the option that this was here wave 3, even though it doesn't really look that strong, this is wave 4 and we finished up wave 5 up here, so also a possibility that we run into an extended wave 5. If that is the case, you connect wave 2 with wave 4 and it gives you that trend, and then this trend is very important once we get down there, what's about to happen if we pull back from here and come up for higher highs, or if we break that. Once we break that whole move to the upside is most likely to be done. Just to keep that in mind, and that's just what the typical Elliott theory tells us. The other option is, and we saw that not as extended as this one here, but we saw that in the S&P and in the NASDAQ in summer, that we had a very small A, a B, and then a very, very large extending C, which finished off at the 16th of August. I think in the NASDAQ it was even more extended than in the S&P. So just keep that in mind. And that's one of the reasons I keep my hands off DAX. I kept my hands off DAX for the last 6 to 7 weeks, because that structure didn't really add it up into my logical theory of trading. So, however, I went in with my first short on yesterday with that Batman formation, and I took already 1/3 out, 2/3 will remain, and we'll see how this one works out. Yeah, I hope you liked this market update. It was a bit longer than usual. It was only about the DAX. Probably make another one about the US indices tomorrow on the weekend. And yeah, give me a like, a thumb up, or subscribe to this channel, and I see you on Twitter. Thanks for watching.